Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, October the 4th. The year's 2021. Let's talk trading. Trading is continuous. These videos are for educational purposes only. Your results may differ from mine. I was talking with Walmart earlier today, and he said something about taking a break while he was trading. And it got me to thinking, you know, and hopefully he'll be on later this week and he can explain his take on it. But in the Forex market, trading's pretty continuous. It's, 24/6, I guess. I can trade from Sunday about 2 o'clock till Friday about 2 o'clock. That's six days out of the week I can trade. And it's around the clock, it's continuous. But do I have to trade every minute, every hour, every day? And the answer is no. And I think what happens is sometimes we get caught up in the trade. We get in the trade, we get out of the trade. Then we got to get back in the next trade. And Walmart was saying how he likes to take a break sometimes and he'll miss a trade. And like I said, hopefully he'll be on and we'll talk through that aspect of it. But I just want to focus on the fact that you don't have to sit there and trade like it's a video game. Like every move, you have to do a counter move or you have to get in on the action. Um, I've stated in the past that trading is waiting for an entry, then you enter, then waiting for an exit, and then you exit, and then you wait for an entry again. And about 99% of the time, trading is waiting. And so what that means is it's so much better to wait for your opportunity than it is to try and manufacture opportunities and just jump in trades and sometimes jump out of trades because many times, and I spoke about this, I believe, in yesterday's video, last night's video, about exiting the trade and thinking in terms of leaving pips on the table and how that can get you into the wrong mindset. So for example, in the money management, I talk about taking the profit before the market takes it back. So you may be up 2.5 pips, and it starts to drop and you exit. Or maybe you take 50% off the table and move your stop to break even. So the worst thing that happens is you get some profit. And then, of course, the real worst thing that happens is you take part of your profit, then it hits your stop, and then it goes your direction for, 50 pips or something crazy like that. Well, it could happen, but that's just trading. So we'll take a quick look at the monthly chart here since we're only into the second trading day of the month. And you can see we're already 140 pips above the open. We dipped into the previous month's lower wick zone and we came screaming out of it. So once again, now that's a trade you could have put on. You could be sitting back, not doing anything. You could be up 140 pips on one trade. And but what do you do? Do you do that? I didn't. It's one of those things where, hindsight, Harry Hindsight's going to say, yeah, well, you could have done this. Point being is that we know this ahead of time. We know this is true even on the weekly. Weekly open, we're 62 pips, 63 pips above it. Once again, it dipped into the previous week's lower wick zone, came back up. You could take that trade. And just so you know, all the gaps have filled on the weeklies. And we've talked about this before. And we have the opening range for the month, which was Friday. And you see here at 35.75, that was the high. That trade right now be worth 39 pips. Once again, simple horizontal line trade, not trying to trade off of like 1 minute or 5 minute levels. Even though we do that, we like to, Walmart and I like to scalp a lot, but I'm also starting to think I've got a new idea um, about trading, and I'm going to probably do some implementing. And basically, it's to treat the daily chart or maybe 4 hour chart like it's a 1 minute chart and take trades based on that. Um, and it's something to think about because all of these methods work no matter what the time frame is. And the methods I'm talking about would be buy zones, wick zones, higher lows, lower highs, those methods. So for example, here, if you look at the daily, here's the lowest high. If you're taking that trade, you'd be way up. Yearly open, we're only 28 pips below it now. We were, what, over 200 pips below it just a couple of days ago. So that shows how price moves. And we've crawled back into the inside bar of 2 months ago and of 6 weeks ago. And we have a 3 pairs over 100, with the pound being 100 pips in range, that is. And I'm going to pause the video for a second here. Okay, I'm back. We look at the buy zone. You can see we missed the daily pivot. We went, as we looked at this yesterday, the buy zone triggered. You can see here on the short zone, there was just a couple of handful pips to be had. Once again, another buy zone trigger. And there's still some people out there, some traders that just don't understand the buy zone. And to me, this is one of those ones, if you don't see it, don't trade it. Because if you've got a whole bunch of questions on it, this is not the system for you. Not the method. This method should be so obvious that your only focus is on exploiting it for your gains. You know, for those of you just tuning in, the buy zone says we're going to set a range between the top of the buy zone and the bottom here of the short zone. That's only 20 pips. And we know price ranges on the pound. I'm not even sure. I think the average range right now is somewhere around 80 or 100 pips on the pound. But you can't fit 80 in the 20, and it's going to stick out of one end, the other end, or both ends. It's just not going to range between these two for a long period of time. It's going to break out of that area every single day. And so your mission, if you decide to accept it, is to exploit it, figure out how you can exploit it. And people talk about getting whipsawed and blah, blah, blah. I'm sitting here looking at the chart going, well, if I were to place my buy here and then I would reverse here, that's a 20 pip risk. And I said reverse rather than stop because once price hits the zone, it's telling you what to do. So if price is in between these two red lines, which are only 2 pips apart, it's telling you to short. So if you were long, then it's basically telling you to get out of your long and go short. And if it's in between the two blue lines, it's telling you to go long. And if you were short, it's telling you to get out of your short and go long. I mean, it's in there, but and it's not a put down if you can't see it, because there's some things that I can't see. There's some methods just make no sense to me. I can't figure them out, but that doesn't mean the method's no good. I just say I don't understand it. I can't use it. It's not for me. So once again, this method is just so simple. There's There's really nothing you have to do but just wait for price to hit a certain level, and then you go either long or short. That's it. Nothing more. And then it's all risk management and money management from there, just like every other method. Once you put the trade on, it's all risk management and money management. That's all there is to it. But some traders, for some whatever reason, they just haven't grasped that fact. That's just one of the things about trading. And I'll even repeat the fact that, you can do everything right, price gets in there, and then it moves against you. But that doesn't mean the method doesn't work. It just means on that one particular trade was a loser. But it doesn't make the system a loser. Okay, moving on to the rat zone. The red rats feasted. In fact, I got part of this. I'm kind of kicking myself for not getting more of it, but then again, that's just trading. And the reason I'm kind of kicking myself is because I saw some return bars, this being one. Then there was a return bar down here, and then there's a return bar here, and a return bar here, at least in my estimation, and that's just on the 15-minute chart. Usually I look at the 5-minute chart, and you'll probably see some of the same areas where there's return bars, like this one here. Okay, we've taken out the monthly pivot. And we've taken out the weekly pivot. But we didn't take out the daily pivot. So here we've got an open. We took out the pivot from 2 days ago that I mentioned last night. So now we've got one below, one above that hasn't been taken out. In and out of the upper wick zone, previous day's upper wick zone here. See a nice move here to the north, come back in, gave you a second opportunity at that psychological 75 line. On the lower high, higher low, you can see here the dots. This would have been a really nice trade. And what happens is sometimes you'll get the signal, and then there'll be some pips. It'll come back up, and maybe you exit out. It'll barely get in there and then continue down, and you kick yourself. Well, what you have to do in those cases is you have to decide ahead of time what you're going to shoot for. Are you going to trade off of 1 balls, 2 balls, 3 balls? Are you just going to go for X number of pips? Are you going to put your stop loss and then maybe mirror image on the TP side to have a 1-to-1, or maybe you want to do doubles, so have a 2-to-1? That's all up to you. But the entry doesn't change. Once again, money management, risk management, that's the key. Okay, we're looking at the wall mall this hour. You can see here how many times it's gone across that 3610. And here it broke through. Actually broke through the previous hour's high, and now it's returned. Once again, showing the rat zone. Smart rat. Is this the smart rat? No, this isn't the smart rat. This is the regular rat. You can see the price is 63% of the ATR above today's open, and some nice ranges here. And there we actually hit in the ATR zone, and we're pulling back. So, fellow traders, think about it. You don't have to trade continuously. You can maybe take a trade, take a 5-minute break, come back in. So your brain isn't totally getting fatigued from all that action, all that price action, and trying to figure out, and all that stress of being in a trade and maybe you're underwater. So don't do that to yourself, because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.